It's Brian Preston, the money guy.
When you think about doing a FIRE movement and being successful in it, do you have to think about the way that you save and accumulate differently?
Yeah, and I kind of gave it away earlier with my ladder analogy, right? So if you're really killing the game right now and you're in the higher marginal tax rates, you pretty much have to max out the 401k and take the tax deduction.
Sure.
The savings are just too valuable to forego.
Right.
That doesn't mean that down the road we don't do some cool strategy with Roth conversions or something like that when you climb back up the ladder starting at the bottom. So
if you are someone who's in the FIRE movement and you are in a higher income tax bracket, and you say, well, okay, Gabe just told me I can't forego the 401k, but I still want to retire at 40 years old.
Yeah.
What that means is you have to be saving after-tax assets. Yep. You have to be able to get to where you can take advantage of the 401k, but you're still doing the Roths or the backdoor Roths or the after-tax savings so that you can create that bridge money, right?
Absolutely. And we do have a lot of people and clients, listeners of the show, that talk about the after-tax opportunities in a 401k, mega backdoor Roths, retiring early and starting those conversion strategies to start accelerating income.
You had talked about one even with charitable giving. That's something you have to think about when you think about how you approach financial independence, retire early.
So if you're charitably inclined and you're thinking about giving money away and you're going to be in a super low tax rate environment in the future, you might want to think about shifting some of those future charitable gifts into today's tax bracket.
While you're in a higher tax bracket.
And you can do that with some good planning.
Okay.
You can really front load your charitable giving now to get the bigger tax benefit when your income's higher.
And then you had said even one of the other things you have to think about is what type of taxes you're paying. So when you are in retirement, are you triggering ordinary income taxes? Right. Are you triggering long-term capital gains taxes? Because just that thing alone will have a very big impact on the longevity and the sustainability of the plan that you've put in place. Are there any blind spots that FIRE folks should especially measure twice and cut once on before they choose to go this route?
Really evaluate where your parents may be, if they're entering into retirement, where your grandparents may be, and think about the things that they did and look at the things that they did during their retirement. Sure. Because it might not be as illustrious or nice looking as you think.
So what you're saying is that passion project, because I think one of the articles said, a lot of these folks, they work in these high stress jobs and they work 80 to 100 hours and they just want to think about, doing home brews and farming.
Sure.
But when it comes down to it, home brewing and farming is kind of a hard thing to do. And
it's backbreaking work.
You may not love it. It may not be something that's fulfilling. It may not be something that's great. So, we'll talk in a second about what you can do to kind of figure that piece out.
One other example that I saw was my wife. She was entertaining the idea, like on the weekends and stuff, of getting into like a philanthropic, like trying to sit on a board.
Yeah.
Or going to work for a nonprofit.
Sure.
And you start getting involved and you start really seeing, not all nonprofits might be like this, but there's some politics involved in that too. So you might not be running away from the things that bother you today.
Yep. Absolutely. And I think the big one, the other blind spot is, and we mentioned this earlier, and this is sort of that Brian echo coming out of the show, you have to make sure that when you make the choice to exit, you really know what you're doing. My notes on here, I paraphrased, I said we're not all number 23. We can't all leave the game, come back and be a superstar. That's just not the case. So if you choose to leave a career, a high-paying career, a very lucrative career at the height, just know that you might not be able to get back into that. So you want to make sure you measure 2, 3, 4 times and only have to cut once. So what are some things that we can do, or what are some things if you're a financial independent person do to prepare? What's kind of the checklist to make sure that you're setting yourself up for success?
So I think that if you're a hardcore FIRE follower, you're probably test driving your budget all the time anyway, because you've got your wall chart and you're looking at it all the time to see if you're in the right zone for your spending.
Sure.
But let's say that you want, one spouse wants to retire early at 40 and hang out and do things at home.
Sure.
Don't spend her income. Don't spend his income.
And see what it's like without it. Yeah.
Test drive it while you've got it.
And if you think that, you want to retire so that you can go hiking and go see all these places, maybe go do some hiking on the weekends while you're still working to make sure that's something you actually want to do. Or go start doing home brewing. The best thing you can do is test drive. That's another huge one that we do with Fritz. He said you have to test drive your retirement. That's especially true for early retirement folks as well. You said this. You said put a plan of action together on paper.
That's right.
Talk a little bit about that.
Anytime that you put your goals down on paper, we talk about this all the time, it becomes more real, and you have something to measure your success or your progress along the way. So whether it's tracking your net worth or just putting a number for your portfolio value, I have a client out in Washington that every month they get together, they talk about things, and then they put their portfolio value in a little bitty corner on a magic erase board on their refrigerator.
Just to remind them.
Yep.
That's awesome.
So do little things to give yourself nuggets along the way.
I love it.
To know what you're doing.
And so when you write this plan down, you think about it, if you find it's hard to stick to the plan, it should be some red flags. Your spidey sense should go off. If it's really hard to stick to a plan in the planning phase, you may want to be nervous about your ability to stick to the plan in the actual implementation phase, in the actual retirement phase. So let that be something. You said this. You said be smart about the way you save and spend.
Yeah, absolutely. So you have to turn around and go, okay, well, even though I am going to retire at 40, conventional wisdom would say I can't touch my 401k dollars until 59 and a half. Right. You really need to read into that, hint, hint, about what you can do down the road in your 40s to start ushering money away from the 401ks into your own wallet. So, yeah.
And I think the other one you said was make sure that you're not taking shortcuts. And this is not one I had thought about, but if I think back to my cereal example, I was taking a shortcut. I was like completely foregoing health and like any sort of like nutritious type lifestyle to try to save money. Yeah. That would have been a shortcut that would have had horrible implications had I seen that through until now.
The thing I tell people all the time is you have to have umbrella insurance. If you have an investment portfolio, if you're in a high-paying career field, if you're a lawsuit candidate, it's too cheap not to have.
Yep.
Don't try to save money in areas where it just does not make sense to save money.
Yep.